AI agents now send payments, payouts, and transfers. This is AxonFlow's Fraud and Risk Add-on, a pack of 10 hard rules against financial crime, applied at the moment an agent tries to act. Each rule names the public source it is built on: OHFAX sanctions programs, FATF money laundering patterns, OSHWASP security categories for LLM applications. The rules decide. A sanctions decision is never a probability. Here is the attack finance teams worry about. A purchasing agent has just read a vendor invoice. Hidden instructions inside that document tell it to change the supplier's bank account and pay an inflated total. The agent itself is authorized so every system downstream would see a normal, legitimate payment. Before acting, the agent had to ask permission. The answer was no. The payment was stopped before it ever reached a payment system, and the decision is already on record here in the audit feed. 2 rules fired on this one decision. The payment authorization rule stopped the bank account change. The agent was trying to use a payment tool in a way it should not, and the platform's own personal data engine caught the raw bank account number in the request. 2 layers of defense, 1 record, and the record shows exactly which rules fired and why. Now the same agent is compromised in a different way. It splits one large transfer into smaller legs, each just under the reporting threshold, a classic laundering pattern called structuring. 2 of those legs have just come in. Neither was blocked and neither went through. Both were escalated for human review. On the first leg, 3 separate checks caught it. The amount sits in the range FATF flags for structuring. The destination is on the FATF increased monitoring list, and the risk score flagged it as unusual. By leg 7, the reported frequency of these transfers has tripped the velocity rule as well. The record shows why. The risk score came in at 0.020, above the model's configured threshold of 0.012, with the model version stamped and the scoring status recorded. The strongest signals behind the score are kept in the stored record and its compliance exports, a complete record for your compliance team. The score never decides alone. It escalates this transaction for human review. And here is that review. The pending entry is waiting in the portal's approvals queue, badged as an agent decision, carrying the rule that fired, the reason, and the EU AI Act's Article 14 oversight context. A reviewer writes a justification and approves it, right here on the page. One more thing, because every fraud platform should answer it. What happens when the scoring service goes down? We took it down ourselves and replayed the exact same transfer. Still escalated for human review, this time on the hard rules alone. The rules that always apply, even when the model is down. The record states for exactly this decision that scoring was unavailable. Degradation is visible, never silent. The Fraud and Risk Add-on runs on top of AxonFlow Enterprise, inside your own deployment. Transaction details are never sent to a third-party service. If your agents touch money, talk to us about early access.